Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about using the Viper tools to trade the financial markets, you are absolutely in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. All right, tonight's topic is trading, how and when to trade and not to trade ranges. Now, I've asked this before in the beginning of some of my webinars. How many of you like to trade ranges and how many of you don't like to trade ranges? How many of you in here tonight like ranges and want to trade them, and how many of you really don't like ranges? Okay, we got two don't likes. Jeff G is saying we got the two, let's see, it was Craig and Roger saying they don't like it. Jeff G saying I never used to, but I was started trading them today in the past couple days, and I'm starting to do pretty well. Hey, Rob J, Maurizio, ciao Bella. If you're just coming in, of course, we're just getting started. You haven't missed anything yet. And by the way, this is recorded. Just a heads up, I'm going to show us a chart. If you're just coming in, you're going to notice this does not look like the trading room charts. For some reason, my trading room template did not load properly. So what I have here essentially are the bands. I've got the Band-Aids, and I'm missing, of course, a lot of indicators, the Viper indicators that make things look a lot clearer. Yeah, hey, Maurizio. Yeah, I'm just having some issues with some of my indicators. We're going to go ahead and do the webinar anyway. We'll fight through this. It's going to make it a little more challenging because we don't have the swing indicator, we don't have the background colors, the bar colors, and the ellipses, and all the good stuff that really makes it easy to see trades. But given the fact that the topic is ranges, I think we can work through this because I really want everybody in here tonight to come away with a couple of things. First of all, the most important thing to figure out when you're looking at a chart is, are you in a range or not in a range? And I'm going to show everybody in here very, very quickly how you can figure that out. And then equally as important, even though we have these sort of dummy down charts because some of my indicators aren't loading properly, we'll be able to identify ranges that you may want to trade and ranges that you probably want to stay out of, which is the most important thing here tonight. So when we say range, the term trading range, what does that mean? Let's start with the very basics so that we're all on the same page here. What does that mean when somebody says, hey, we're in a trading range right now? What does that actually mean? Trading range, when somebody says that. Looks like we're in a trading range right now. So while you're pondering that, let's look at some areas, and we'll just sort of work on them together. So we're all on the same page here. Obviously, this would constitute a trading range, right in here, right? What does that mean, the term trading range? Here we go into a little bit of an uptrend right over here, like this. Trading range. You hear that term bantered around all the time, but many times we don't pause to actually discuss what is that. What does that mean? Okay, so Craig is saying it's his understanding would be going back and forth between support and resistance. Good. Bouncing between two price areas, not trending. Good. Trading within 2 points, Maurizio. Good. Oscillating between X and Y. Lower similar levels, highs at similar levels from Walter. That's correct. So by definition, a trading range is when a market, some of you said this is not trending, the opposite of trending, meaning that it's staying positioned between a support level and a resistance level. You know, you can make the case that there's resistance, you know, is up in here, and then of course there's resistance up in here. So the opposite of a trend, which is higher highs and higher lows, is not higher highs and higher lows, and you're essentially bouncing in an area bounded by support and resistance between those two levels. Now, markets can spend a lot of time in ranges, and that's why this is an important topic you can't just write off. I mean, what I'm suggesting is that if you don't currently have trading ranges in your repertoire of trading, you might want to think of dabbling into it, because, you know, there's a lot of times you could just sit there in a range that's tradable, waiting for a trend to break out, and just sit there, you know, for half an hour or longer, hour at a time, just waiting for something to happen, and maybe you miss it. So while you're in the range, you're bouncing between it, and when we come out of a range, you know, we can go into another range. We don't necessarily have to trend, but generally speaking, what would happen to identify that that you are no longer in the range is that either the upper or lower level will break. Generally speaking, there is some kind of retracement. Sometimes it'll come to here where it broke out and bounce. I know all of you have seen that scores of times, right? It'll come right into where it broke. That will find support at the previous resistance level and bounce and then start heading up. Or sometimes you'll go just a little deeper. But the important thing is on that break and retrace, it's got to hold a higher level or lower level in the case of a breakdown to the downside. And then, of course, you can see that it comes up and then puts in a higher swing. So now you have bona fide uptrend with higher highs and higher lows. Now you are definitely in an uptrend. So you're trading pullbacks. We're not going to focus that on tonight because we're talking about ranges. Now, what is an acceptable trading range? I had webinars months ago dedicated to this topic, so I know some of you were in those, so I'm just double checking to see if anybody remembers what our definition of an acceptable trading range is. And this is a simple definition that we can all keep sort of in the back of our heads to understand, you know, what that is. 20 to 25 ticks, preferably 30 or more ticks. Good, Jeff, Walter, and Roger. Yes, yes. So when you consider trading ranges, there's two main components that drive your thinking in terms of whether you're going to trade it or not. The first one is the size of it. So let's do some math here on the range that we have on the chart here. See some folks still coming in. Hey, Paul, good to see you. By the way, just for you new folks coming in, I had trouble loading all my indicators for some reason on the template here tonight. We're going to go ahead and forge through it because we're going to look at range trading. But right now, the only thing working for me is the bands. I have to get that fixed tonight after this thing wraps up. But anyway, so yeah, so let's see. So generally speaking, you've got support here right around this 66 swing level. And the resistance level up here on the upper end of the range is arguably somewhere here around 92 to the upper level of 02. So what is that? To 92 is 26. From 66 to 92, 26. In the upper range arguably is closer to 30, 32 ticks. So this range would be considered what? Tradable, right? Sort of at the lower end of our trading range, but it would be acceptable, 26 to 30 ticks. Now I want to talk about two other important concepts, and this is really something you have to look at when you're considering a trading range, and it relates to how clean or how choppy the bottom or top of the range is. Now when I say that, here's what I mean. Notice how down at the bottom of this range, that particularly in this area right here, just above the outermost band, we have candles that more or less come down into a very close, similar area in terms of support. See that? See how fairly clean that is? Now, the difference with the top is this, is that not quite as clean, right? And what I mean by that is that in order to draw this same box at the top for resistance, one would have to do it more or less like this. Like that. Now, why is that important? Anybody? Why is it important to know how clean the top is and where the support and resistance levels are? Because it's going to drive your entries, right? So when you think about trading ranges, after you have identified those two things, the size of the range and the sort of, for lack of a better term, cleanliness or of the alignment of the top and the bottom. If the candles are all lined up pretty clean and close together, as you have on the bottom here, pretty good trading range to trade. It becomes a little more choppy if you get spiky up here at the top. So in this particular case, looking at this range, would your primary entrance be long at the bottom or short at the top? Let's say that tomorrow morning or tonight, whenever you trade, you get up, you pull up your charts, you quickly identify that you're in a range. It kind of looks similar to this. Whatever instrument, might be a currency future or something, and you say to yourself, okay, wow, looks about 25, 26, 28, almost 30 ticks. I think I could trade this. What would your primary entrance be, to buy the bottom and scalp the top? Or would you be shorting the top and taking profits at the bottom? Or would you trade both sides? Yeah, I'll give you that, Craig. This decision is going to be a lot more difficult because you don't have all the indicators on here that would help you, like the background colors and the bar colors and the swings and the ellipses and all the goodies that we have on our charts in the room. So my apologies. It makes it a little more difficult to assess what you would really do in here. So just do the best you can. I'm going to help you with some thinking in this area that could drive your decisions, irrespective of what indicators are on here. Just looking at the swings, okay? So just bear with me. Bear with me on this one. Think about your entries. Think about what you would take. And what would be the cleanest, best course of entries, in your opinion? All right, we're getting feedback from the team. Jeff G saying long. Craig says difficult to make a call. Agreed. Roger long from the bottom. Maurizio buying the bottom. L Miles. Hey, L Miles, I didn't see you come in there. Good to see you. He trade both sides. Interesting. Okay. Walter buying the bottoms. Craig saying you have to make an assessment between 516. Okay, good. 10 ticks on Maurizio. Long from the bottom with Adam. Hey, Adam. Some folks still coming in here. So there's several factors to consider. Now, generally speaking, if prior to this, if you had a long protracted downtrend, this wasn't particularly a downtrend. In fact, from 3 o'clock in the morning, you've almost more or less been stuck in this range. So technically, you don't have really much of a downtrend. But if you were coming off of a downtrend and the top in the background was still red, and the tops of the range were clean and clear and close to each other, you would want to be shorting the top and covering at the bottom. And the reason for that is that's the most logical way to do it, in the fact that you might get, in this hypothetical case we're discussing here, you could get trend continuation, in which case if you're shorting the top, one of those could turn into a runner when and if it broke down. But that's not what happened. However, in this particular case, the cleanest form of entrance would be the bottom, simply because you can clearly see that by fading the bottom by 5 ticks or 6 ticks off the lowest support level, you could put your buy orders in somewhere in here, comfortably get filled, and then not get stopped out. Now that not necessarily can be said of the following, and here's how you have to look at the range from a healthy point of view. You have to say to yourself, what is the lowest swing that would get me in from the top? Well, arguably it would be somewhere in here, is the lowest common denominator of fading the top part of that range. The problem with that is that you have these swings that go much beyond it that could actually stop you out, like here, for instance. So how easy it is to see where to get in, what trend you're coming off of, these are all factors in addition to the size and picking your primary entry. So when we say fade the bottom, you're going to have to go at least 5 or 6 ticks, fading the bottom and fading the top. And you hear this all the time in the room. For those of you that might not be familiar with that term, means that it's the distance between where an established swing is located in the area in the trade entry or exit on where you need to get in or out. So there's fading getting in and there's fading getting out. In the case of the bottom fade, you have to look for the lowest common denominator of the swing levels of the candles and fade that to get in. Okay, that's the bottom fade for your entry, getting long from the bottom. And then, of course, to get out, you have to fade the top here, which would be this area right here. That would be the fade. Everybody see that? Everybody understand what we're doing here? So the money to be made in this trading range is in between those two fade levels, which would be this area right here. So let's do some quick math, okay? So if you're fading the bottom and you're getting filled somewhere around 70, 71, 72 in here at this line, fading the bottom, 64, this is pretty close. All right, so you're getting in here at 70, 71-ish. The bottom of the range is at 63, so that's 8 ticks. So if you have a 12-tick initial stop, when you're filled on this bottom entry long, your 12-tick stop is below the lowest swing. So you're good, right? Your stop's down here. When you want to get out and you put your order to get out from the long position off the bottom, you need to fade the top so that you get filled. So you're going to come within this distance right here. Hold on, this thing's locking up on me. Give me 1 second here. Hold on. Okay. See that right there? You have to put your sell order. So the meat of the trade is actually occurring between 71, fill long, and getting out at roughly 90, 91. So the inside of this range is around 19 to 20 ticks, depending on how much slippage you actually get. And that's pretty good. If you have a 25 to 30 tick trading range and you can get between 15 and 19, 20 out of the middle of it, that's good. That's ideal. That's sort of the minimum of what you want. So let's look at the candles real quick and see how many trades we actually got. We got 1, we got 2 with that bounce right there. We got filled on the third one here where it came back down through and bounced, did not get our stop. And it's hard to say whether we would have got out of that one or not. It's hard to say on that one. It really depends on how much you really faded it and where if you had some slippage in there. If you didn't get that one, then definitely this one would have filled up here, right? And you got one more right here, depending on how close you came to here. You definitely got filled one more time here, kind of bobbled around down at the bottom. See it just kind of sitting on that swing right there. Probably would have been filled on one of those bars there, and of course it would have taken you out on that one here. 1, 2, maybe not 3, 3, 4, 5. Maybe you didn't get all those. And the reason I'm saying maybe you didn't get all of them, let's discard at least a couple of them, and I'll show you why in a second. Let's kind of discard this one, and let's discard this one. So 1, 2, 3, 4. 3 or 4. You probably got 3 or 4 in there out of the 5 opportunities. So if each one of those was somewhere around, I don't know, let's go on the conservative side, 17 to 19 ticks, and you got filled on 3 or 4 of them, how much money did you make in there just on one contract? Well, let's use the lower number. Let's say 17 ticks times 4 is what? 68 ticks. One contract on YM times 5 is $300 and $350 on 4 trades there. I'm tossing those other 2 out, and here's why: is because you need at least 2 or 3 swing levels as a minimum to determine the range that you're in. So generally speaking, the first range trade you're going to miss. Usually you're going to miss that because here, let's unfold this in real time. Let's pretend you're watching this and this is what you're seeing. Market's coming down to a swing. You've got a swing here around 60, 65. Comes back up, hits the swing at 96 to 05, rolls over, double top it a little bit, comes back down, hits right in here, pops up, comes back just shy up here into this 90, 96 area. Now see how you probably would have not have caught that one? Because what's being established here is the range inside of a much larger range. The much larger swing levels are located here. This is sort of the difference between what Gary refers to as sort of your medium, your large, and your medium and your smaller swings. So in order for you to establish what the range is to trade it, you have to have at least 2 or 3, preferably 4 points where you now see, okay, I had a swing here, I had a swing here. Now I'm getting swings here, right? Now I'm getting the swings here, and I'm seeing some consistency, and I'm seeing some swings up here. And you quickly do the math, and you look at where the swings are located, and you say, okay, yeah, I got 25, almost 30 ticks. It's tradable. And you know what? I see the bottom's a little cleaner just above here, so I'm going to go ahead and buy long, and then I'm going to fade this top and get out up here. And you try one. So the next one that comes along, you put the buy order down in there, or your sniper line, or whatever tool you use, and you get filled, and you get that one. Right? That's why I discounted this one. Because the first one you usually don't get. Because you're establishing the range, right? You caught that one, comes down, you get another one. Maybe you get out of that one, maybe you don't. That's why I kind of discounted that one. See how it didn't quite get to your top there? Depends on the tools and how you set it up, really. Definitely got that one. That came down, filled you on the way back up, got out of that one. So that's legit. Got that one. And then the final one was this little dip-de-doo where she sat on your entry line here for about 10 minutes and then shot up, took you out, and then we went into the uptrend. I've spent a lot of time on this range simply because there's a lot more going on in terms of how to actually trade a range than meets the eye. I think you see that if you approach a range from a more technical point of view, in the fact that there's more analysis that needs to be done than just simply taking a chart with some bars on it and saying, well, I think I could trade that, maybe I couldn't. We just went step by step on how you analyze it, you make your decisions, and then how you enter and how you exit and how you approach once the range is established. Does anybody see that? Any questions on what we just covered? We all experts on ranges now? Gonna go out and start loading up the range boat tomorrow? Well, let's do this. This was a pretty simple one. Most of us know it's not always going to be that simple, right? There's smaller ranges, there's bigger ranges, and most ranges are a lot more complicated than this one. So let's do this. Let me pull another instrument down here, and let's look at some different ranges. And I'm going to let everybody in here tonight make a call on whether you think the range is tradable or not. And then we'll make some other decisions. Stand by. I'm going to bring a Russell chart down. Here again, I know we still have people coming in here. If you're just coming in still and you're seeing these charts for the first time, you're noticing just the bands on here. That's because some of my had issues with a few of my Viper indicators tonight when I wanted to load up all the charts for the webinar. My apologies. We'll work through it. We're halfway through it. We'll be okay. We'll be okay. Just look at it this way. If you can see these swings and see the ranges with just the bands, you're in pretty good shape. And you are, you know, enhanced with all the other tools, will be even better off. All right, let's look at another range on the Russell, and let me ask you if it's tradable. So we're going to quickly go through a series of exercises to determine whether the range is tradable or not. And I'm going to do this fairly quickly, and as I do in most webinars, you will have 10 seconds to answer, and these will be yes/no questions. Ready? Russell chart, far right-hand side of the chart. 10 seconds on the clock. Is this range tradable, yes or no? Right here, where I'm circling my cursor. So don't worry about the rest of the chart. You don't have to look over here and what trend it was in and all sorts of stuff. Just this area right here, is this a tradable range, yes or no? Just a Y or an N. That's all you have to type in, and you have 5 seconds left to do it. Just a simple question. Can you trade this range or not? Yes or no? 3 seconds left. See, I want to train everybody where you quickly look at something, I mean, like within seconds, and instantly know, are you going to trade it, yes or no? Because that's the first decision, right? We can't do anything else. Time's up. All right, no's across the board. Good, perfect. This is absolutely not tradable for a number of reasons. Because the size is much too small. First reason for disqualification. You know, you got resistance up here at, I don't know, 48-ish something, 48.60 something, and you got support down here, 47, 47.40, 47.50. The whole range is only about 10 to 12 ticks. So it's completely untradeable. Yes, the answer was no. All right, moving on. I'm going to clip through these quite a few at a time. So I want this to really be ingrained in everybody's your trading book there. I'm going to make these a little tougher. Ready? 10 seconds on the clock. Here's another Russell setup right here. And this would have been late morning to mid-morning today, around 8 o'clock to 9 o'clock Pacific. Here we go. This area right here, is this a tradable range, yes or no? Seven seconds left. A Y or an N. That's all we need. I know it's not easy, is it? I'm trying to simulate what you're going to see on a chart tomorrow or tonight, whatever you're trading. What do you think? Would you trade that? Yes or no? You don't have to worry about where you would get in, or you know what the entry was, and fading this and fading out. I'm not talking about any of that. It's just a simple call. Would you trade it? Yes or no? 2 seconds. Time's almost up. I'm circling it with my cursor right here. Just before 8 o'clock to 9 o'clock on the Russell today. Okay, we got it. Time's up. We got a mixed bag here. We got a couple of yeses out of Adam and Roger, Jeff G, Craig, and let's see here. Maurizio saying no, bunch of no's. El Miles says it might be, but I would personally leave it alone. Now that's a good answer, Miles. I like that, because what he's saying is, my interpretation, which is a good one, is that from a technical standpoint in terms of size, it probably meets that criteria, because you got support down here at you know, just under 46-ish, and you got resistance up here arguably around 48 and change. So you're right on the cusp. Yeah, you're right on the cusp. It's right around 20, 22 ticks. You're right on the cusp. What makes this a little more difficult is that the top and bottom is not really well defined, and you don't really have all the tools to make the decision, because we don't have the background colors and all the other good stuff we need. So I won't get into any of that right now. I would say that's right on the edge. The tops and bottoms are kind of okay defined, and you could go either way on that. So this is the when considering trading a range, that's the discretionary part of it. The discretionary part is you may look at a range and you may assess it, and from a strictly a size point of view, say even at this point right here, this is the point where you would have known you were in a range, right here. Here, let me go back, right here. At this point in time, this swing was established, and this swing was established. And they both were slightly above and below where the prior swings were. So we knew at this point at 8:20-ish in the morning that we weren't going back up here to this high, and we weren't going back down to that low down there, and we were more or less stuck in about a 20, 22, 24 tick range, which is sort of the lowest end of acceptability. Good. But that's where the judgment call part of it comes in. Just because it's 22 and 25, 30 ticks, size-wise, you don't necessarily have to take it if you feel that the top and bottom aren't well defined. Or in this case, we don't have all the indicators on here, so you can't really tell would you be shorting the top or buying the bottom. Good. Total judgment call. Let's do one more roosty one, and then we'll get another chart up here. Let me clean the chart off. Hold on. Stand by. All right, let me give you a little bit tougher one, because this is what you see when you're trading in real time. This is sometimes what you see. And by the way, this has a lot to do with the instrument that you trade. Most of you know that some of them can be a little spiky at certain times, okay? So the top and bottom of the range may or may not be well defined, right? Some of them are better at that than others. You have to really play with it. Hey, Chris, no problem. This is recorded. It'll be up on the webinar. You missed the first part of it. No problem. Here we go. I'll give you 15 seconds on this one because it's a little tougher. From this would have been overnight on the Russell. So midnight Pacific's right here. This has been the European trading session for you night owls out there. If you're up and kind of watching the Russell, this is what it did. And I'm going to leave more of an open-ended question here. Is there some point on here where you would take a trade? Would you trade this range? Or technically ranges, because there's actually two here, right? Would you trade these ranges? Leave them alone. So a yes or no. Or if you see a trade set up on here within a range, you could type in a time or two that you, or a level that you would consider taking a trade. 15 seconds, because this is a little more difficult. So yes or no. This area between, say, the first hour of trading in the European session over after midnight, over here to the left. Say you were a night owl last night and you're up kind of watching around for stuff, and you're up all night, and I'm opening the markets over here at 6:30, right here. So here's the overnight session. What do you think? Would you trade anything in here? Is this tradable to you? 12 seconds. Yes or no? Time's ticking away. It's not easy when you look at it sometimes, is it? Yeah, you don't have to make a call on whether you'd be long or short, so that's not the question. The question is would you trade any of this, yes or no? All right, we're getting some mixed answers coming in here. Adam coming out. Oh, well, technically there's a few. There's about 5 seconds left. You can squeak an answer in still on whether you would trade this, yes or no. It's not an easy question. I know. That's intentionally why I put it up, because markets aren't always easy, are they? Maurizio putting in some times here. Okay, putting in some swing levels. So some of you would trade it. Chris would trade midnight to 3 a.m. Time's up, by the way. Adam says no. Craig, I think, would be shorting it. Okay, shorting it. Jeff considering a long around 057, questionable in a tight range. Yes, Craig would trade it. Miles saying primarily no, but maybe at 441. Okay, so here's what makes this particularly challenging. Is that, and I'll look at this. I'd like to look at this in two separate sort of chunks, if you will. It's kind of like we looked at earlier when you have a swing level, and then you have another swing level located near it. You have to go with the lowest common denominator, which is the lowest swing level. So, in terms of this range on the left part of the chart, that would more or less be right in here. So there is some spikiness above it. What becomes a little more challenging is at the bottom, and that's semi-well defined in the fact that you have clearly support right in here and then support below there here. You don't have enough tools on here to be able to determine whether you'd primarily be shorting for your entry or buying as your primary entry. So I'm not going to get into that. We'll just look at the range itself for right now, okay? It's a little more difficult after 441 because when this spike occurred here, let me back up. Okay, let me back up. When you broke out of the range to the downside, I would bet you probably got some kind of, change in the color of backgrounds and your bars are turning red and all that sort of stuff. And then you get this sort of spiky spike back up here like this, which arguably is a lower high. But here's where this happens, and this is a total judgment call on your part, is that if the range that's set up remained this range right here, say 45, 50-ish area down to 42, 50 area, arguably 30 ticks, life would be good because 30 ticks is technically tradable, yes? However, and this happens a lot, and this is what you got to be careful of, is that it never really sort of gets back. It meanders its way on down, meandering its way on down, and then it breaks that a little bit and comes spikes down here and then spikes right back up. So technically, if you were buying support and taking a long and fading the top, you might have gotten one trade over here. But the point I'm trying to make is that sometimes this can be a warning to you that the larger range is really not in play anymore, simply because now your range has been reduced to this, which is not tradable, right? That's what I'm trying to say, is that sometimes you'll get a range within a range, and that inner range may or may not be tradable in and of itself. So as a result, you wind up sort of abandoning this notion, because you would have been sitting here since 5 o'clock to almost 6:30, where an hour and a half it sat in that box. It really never got back up to here, and it eventually did get back down to the bottom, but it was after an hour and a half of mind-numbing chop sideways. So what I'm saying is, in situations where range is set up like this, where you have an outermost swing levels established, but then it mind-numbingly sits there for whatever, 30 to 90 minutes, just chopping in between that in a non-tradable range, sometimes you may just need to abandon those ranges altogether. Yeah, Miles, you're right. And I picked this time because overnight most of the equities are not trending. They're very choppy and sideways. So generally speaking, you'd want to avoid this anyway. Their slippage can be high. You can get sometimes 2, 3, 4 point slippage just to get in and out, right? Volume tends to be low, so your fills might not be good. A lot of reasons why you wouldn't want to trade this overnight, but it's a good example on how sometimes you'll have a range that you might get one trade out of, and sometimes you might just have to abandon the range because it never gets back to the tops and bottoms. You're stuck in this mind-numbing inner chop that was only about maybe 12 ticks wide. Good. Okay, good, great. What else do we want to see? What else do we want to see? Do we want to see NASDAQ or oil or what else? What else do we want to look at here tonight? Go ahead and type something in there and we'll pull it up. By the way, while you're doing that, while you're thinking about what you want to look at next, please, please, please remember to roll your equities and your currencies to the March deal. Okay, you can probably get away with one more day of December trading, okay, if you forget it or you had a couple of trades fire on a December contract. It's not the end of the world, but definitely over the weekend, tomorrow, you want to roll them tonight. You should roll them tonight, but because that's what's going to be in the room tomorrow. If you want to be in sync with what the room has up on its charts, definitely roll it tonight. Does everybody know how to do that? Anybody not know how to roll the contracts? Because I can take a minute and explain it. Does everybody know how to roll the contracts? You know how to do that? Anybody not know how to do it? Okay, we got a lot of requests for NASDAQ coming in. Let's flip to the NASI chart. I think everybody knows how to do that by now, right? Roll your contracts. Okay, you ready? I'm gonna now, we're kind of grinding down in time a little bit here, so I'm gonna throw some curveballs at you. I've kind of been lobbing it up a little bit with some easier questions. Ready? I'll throw a little curveballs at you here. See how you're doing. Okay, what would you do with this chart? From say this point forward to the right. Trade the range. 10 seconds. How would you approach this chart? From here to the right. Those of you wanted NASI, Roger, Jeff, here's your NASI chart. How would you approach it? Is there a top and a bottom to a range here that you would trade? Time's ticking down. I don't see any answers yet. 7 seconds. See some answers coming in. 4 seconds. Time's almost up. What are you going to do? I'm messing with you guys. Girls, guys and gals, everybody. All right, good. Time's up. All right, good. Most of you caught, okay, I threw a little curveball at you here. The topic tonight is ranges. Clearly, this market was trending up and down, right? I mean, with the exception of the fact that this might have been a little bit of a range over here to the left. For the most part, what you were looking at here was an uptrend here, and then it rolled over and went into a downtrend, right? Interesting, some of you said, Adam, for instance, on some of our feedback here, I'd be shorting pullbacks at or not near around the mid band, selling pullbacks from Dennis. Roger shorting the mid band. I see trends. I see scary people. Yeah, absolutely. This is not a range. This is a trend. Good. Most of you caught that. I was throwing a little bit of a curveball at you there. I think I kind of sensed a little bit of smoking and burning from your eyes and your brain, kind of looking at this, not computing what's the range. Nice retracement short at 12.19 for Jeff. Box it in, shorts only. Okay, good. Yeah, this is a trend. So, the way we trade trends is we wait for some kind of retracements and we short them. Yeah, it's a trend. Good. Most of you got that. Kind of messing with you on that one. No ranges there. That was trend trading. All right, let's go look at NASI a little bit earlier in the day. Hold on. Oh yeah, this is what NASI did later in the morning. Let me clean this chart off. Stand by. Yeah. All right, now how about this? This is from about 10 o'clock till a little after 11 a.m. Pacific on NASDAQ. Look like this. Is this a tradable range? Yes or no? 15 seconds on the clock. So we're looking from here all the way over to here. Essentially pretty much the whole chart. Tradable. Is it a range trading or yes or no? Tradable wire in. Yes or no? 9 seconds left. Excuse me, you NASI traders, what do you think? Got a bunch of NASDAQ traders in here. You know I trade NASDAQ too. Time's almost up. 4 seconds. Would you trade this range, yes or no? So we're not asking what the primary entry is because we, like I said, we don't have the indicators on to help with that. We'll look at that in a minute. 2 seconds. All right, good. Time's up. Predominantly, the answers from the team here tonight was yes. So there was a lot of yeses here. Jeff, Maurizio, Chris was saying yes. Okay, so let's do some quick math. Generally speaking, you were getting support 48.25, and top of the range up here was 52.25. You're right at the cusp. 16 to 18 ticks. Let's look at this one over here. Here you're getting support down around this 49.50 area and resistance up here at 55 times 4. You're right at 20 on this one. 18 to 20. So you're right on the cusp. This is an edgy one here. Let's look at something very quickly here now. And I do recall, I think at this time you were coming off of somewhat of an upward trending move, so you were buying pullbacks. Yeah, that's right. Okay, so we consolidated here a little bit to the left. You broke up. You went a little bit into an uptrend. Since we don't have the indicators, unfortunately, I'm sure this was a green background with blue bars, and our swings were moving up. All right. So generally speaking, at this point here, you were still continuing to get sort of a series of higher lows and higher highs. You were drifting higher in more or less an 18 to 24 tick range. So it was tradable. And at the lower end of tradability, arguably, I would agree with that. And you were buying pullbacks into support. Buying pullbacks into support, and you were scalping the tops. Now, if you put 2 or 3 or multiple contracts on, the way you do that is that you go ahead and buy your supports levels when you're scalping this. For instance, here at the mid-band, you got a nice pullback and a pop-up, right? A couple of them. You scalp the top of the range, and then you go ahead and tighten your stops on what could turn into be a runner, so that you get a pullback and you stop out of that, and then you look for re-entry. So you get some re-entries over here at the mid-band. Pullbacks right into support here, pops back up. You get a couple little scalpers out of it, 1, 2, 3, and then you get final pullback into the mid-band right over here for a nice bounce long. Good. Yes, marginally tradable, and you were taking longs from support as your primary mode of entry. Good. Good, good. All right, good. Well, we're almost out of time. We got a few minutes. Let's do. You want to do one more? Does anybody want to see crude, or do you want to do another? You want to do another NASI? Any crude traders in here? We can do one more NASI if you want. Stick with NASDAQ. Crude was a little choppy today, as I recall. It went sideways for a while, and then all of a sudden it got some strange burst. All right, let's do one more NASI while we got it up here real quick. All right, how about this trade? How about this range to the right of this chart right here? Still on NASDAQ, 15 seconds on the clock. This will be our last trade call of the evening, okay? Here we go. So we're looking to the right of this area right here. So basically from about 7:20 a.m. to over to this area over here. In fact, we had the room open at this point. I remember this. I think we were long from a lower level here, and we stopped out, and then it just basically kind of went sideways here for a while. But what is this? Is this tradable? This area right here? What do you think? Last question, last trade call, yes or no? Look at the swings, do some quick calculations. You don't need to break out your IBM supercomputer. You just look at the support and resistance levels and do the math. 4 ticks a point. Remember our rules and our thinking in terms of support and resistance entries and exits. Bonus question would be your primary entry type would be long or short. So it's a yes or a no, tradable. And if you were going to trade it, yes, would you be buying longs or taking shorts? I'll give you an extra 10 seconds for that since we put a bonus question in there. What say you, team? And some mixed answers here, and understandably so. Understandably so. Getting a couple of choppy comments coming in. Okay, I see that. All right. Okay, good. All right, time's up. So just like the other one we looked at, let's look at the whether we had strictly the first assessment of a range is the size, right? And so you can make the case support was holding down more or less in this 36 to 37 area, right in here. And you had resistance up here at 42, so that's 4 times 4, 16. Okay, I would like to approach the answer in this manner. When viewing this swing area as such, if you looked at the bottom of the range being more or less down in there, and at the top of the range was more or less sort of up in this area right here, you're right at the cusp of tradability. Simply because you would have to fade these swings as we discussed to get in and out. Like this. Remember, we have to fade the bottom and fade the top for our entries and exits. Our primary mode of entry would be long, even though we don't have the green backgrounds. We can see that we were coming off of a thrust upward. So you're kind of going a little bit into an uptrend. I'm sure the background would have been green, the bars were blue, and the ellipses were going sideways, and all manner of things like that. So you were buying support. Okay, if you were going to trade this, yes, you were buying support. Many of you said that, which was a good answer. And you could just be scalping this too. I mean, you could just simply put your sniper tools or however you want to get in, buying support down in here, and then just scalping that top. So, you'd be looking to get out of your trades, somewhere up in here. So how much is that inside that range? What is that giving you to get in and out there real quick? Let's see. You're getting filled around 38-ish, and you're getting out around 41.50. Is that 3.5 times 4 is what? 14? Yeah, so I mean, you're scalping, if you were scalping this and buying support, you maybe get 10, 12, 14 ticks out of it. And you had quite a few pop in here too. You had this one, you had this one, you had this one, you had that one. Had this one that might almost stopped out on you. You got that one. There was a few scalpers in here. You could have made a little coin. This is on the very lowest end of acceptability. You get too much lower than that in terms of size. What happens is, and I know you see this coming, is that if you have to fade, if the range is just so tight that you fade the top and you fade the bottom to get in, then this is all you're left with in the middle. There's just no meat in here. By the time you get slippage and commission, there's just no meat in the middle there. But that's why we say if it's a little bit larger, you can fade the bottom a little bit there, and you can get in, scalp up at the top, get yourself 10, 12, 14 ticks. Yeah, go ahead and do that. You get the bottom is fairly well defined. See, it's not too choppy down here. A little blip down here and a little blip down over there. It's cool. Top is fairly well defined. We can see where we want to get out. Lowest end acceptable trading right there. Good. All right, I'm going to go ahead and wrap. Time is up. I'm going to stop the recorder. Final